Good evening, guys. Ken of Tortoise Capital and like the nightly strategy podcast for Veterans Day, November 11th, 2022. This is Friday night, so it's the weekend reports. Want to just do a quick update from my brother's last 2 days of trading. He traded the 9th and the 11th. He was traveling the 10th, so he did not trade. 50 trades. Best trade was 8.2. Our worst trade was minus 1.6. He won 21, lost 25, so that's a zero point 0.4 win rate. Average win was basically 2. Average loss was minus 0.5. So how often do you want that one? It's a 2 to 3 win rate. So that's a 4 to minus 1.5. Yeah, you want that all day. Here's his equity curve. Here's the production sequence. That's one we got to work. Now, it's important to note there's a streak of 10 in a row that don't work. So if 10 in a row on a 40% coin flip, 10 losses in a row, if you just say, well, it's broken, no, you don't understand stats, and then you miss that, the move from 12 to 30. So if you want that, you got to endure that. Pretty good numbers. 2 days. Quick look at Woj's summaries. I just want you to realize where this young man has been. We'll see those charts later, but 3.5 for his day in XRP, minus 2 in Solana. He did 7.5 today, 40R for the week, and he's on trades 3,150 to 3,164, all of them documented and coached and learned from. That's why he can do this. Couple sniper trades of the day. So this is going to be actually in 2 parts. This is Alcoa, 3 minutes. Yesterday's close, big gap to here. Here's the opening range 3, so there's the bracket. It resumes, so I buy it with a standard risk box. At 3R in hand, I just decide why not. Second entry. Here's the peak of the R10. There's it crossing the baby dragon. Here it hits the edge of the dragon after the crossover. So the first position earns 1, 2, 3, 4, 5, 6. Second position earns 1, 2. So that's 8R on the first sequence. I was persuaded to give this one a try. We got the PSAR flip. It tried one time to continue. It couldn't, and it failed. So we bought the R10 crossing the baby dragon, or crossing the dragon. Standard risk box. Didn't really fail, and then took the PSAR exit for another 2. So that's 10R in the morning on Alcoa. The afternoon trade, So the afternoon trade featured this. A long sideways quiet channel, the width of a standard risk box, a PSAR flip, and then when it collapsed, a full risk box out of there. I said, why not? It zoomed all the way down to here. That was a gift, and all the way down, I'm just trying to lock in pieces. It reverses back to where the previous bar closed. So when it reversed there, just take it, and that's 1, 2, 3, 4, 5. Then I got a 1, 2, 3 entry after the R10 flips, crosses the baby dragon. 1, 2, 3 entry, standard risk box. This was the confirmation when it crosses through the dragon and takes out the PSAR and makes the PSAR flip. Then it terminates in a doji, which makes the R10 roll over. And then on the bar where it crosses the baby dragon, I just take that for an extra 2. So that's a total of 7 plus 10. That's 17R in Alcoa. One symbol, 3-minute charts, simplified symbols or simplified indicators, no overnight risk. We're in a bear normal market. That's what it does. Here's a quick look. I guess I want to look at the, let's get the other traders from today before we get into the weekend reports. Let's do that. That we'll get to some closure on today's trades, with your permission. Here's Agnieszka, intraday. She's on Canadian and Japanese pair, 1-minute charts. She's not trading. This is where she picks up the trade. She sees it break through, tries a couple shorts that quick scratches. The third collapsing dragon works. Second position, and exit. Takes her 2 exits. It took half and then another half, and total of 3.9 for the day. Oh, I'm sorry, 3.2 for the day because we got to factor in those losses. Very well done. I find the 1 minute's a little jumpy, but Canada Japan trades in a pretty orderly fashion right there. I don't see anything wrong with that. Nolan is recognizing the importance of finding the movers. We got to find the movers. So here's a PSAR flip. That entry should be here, not here. I recognize that you're waiting for it to violate the VWAP, but if you do, when it violates the VWAP that way, by the same logic, you must get out here and not here. So if we play it by just the straight pattern, you could be short here, and then when it comes to the VWAP, take that, and now you get to make a fraction instead of losing 0.7. I wouldn't mind this as a long because you have swing lows. Now, if you do, when it fails to follow through, you got to get out right about here, and then your short could be here, and then you should get paid to here, and you did. This one came back. He exited. I love the re-entry. Now, when you're this far, you're almost 1R in hand. Let's not lose money on that. You didn't, which is good, but I think anywhere here inside the dragon is better than here. That's where your short should be, because now you have a lower high, and that's a COTA 2, so we could be short right here or when it crosses the VWAP, and we could actually play that one short. That's a quick exit. I like that, couple quick exits. You got to keep firing. This would have paid for the day. Find the movers and eliminate the errors. He's recognizing what movers look like. So here's your OR3. That makes this. Oh, that's Alcoa. That's the trade I just showed you. Yeah. That's the one you want. That one's still pretty good because it's after the R10 wiggle. Yeah, that's what you want. This is Satya improving his chart. This is EWZ on a 3-minute. Gap up. Standard risk box. He sees the COTA 2. Takes it for 1. There's your re-entry for 2. Gets paid. Gets paid. Gets paid. Oh, dude, COTA 2. Still, we'll take 3R. Could have been 7. So, good could become great. Keep up the work. That's how you do it. There's my brother, and now let's see, Dan Blum. Let's see what we got here, Dan. He's enjoying the creativity course. Here's the OR3. So he does take the breakout here. It immediately reverses, so he just decides to cut that. Then the re-entry here is reasonable. He's really waiting for the breakout above the R10, which would make this an emerging dragon. But it's clearly a Kata 2 style. So that's the importance is the re-entry and crushes this for 4, -1, +3. Nice. Now the Home Depot. Oh, he's one. Okay, I'm not going to yell at you now because I noticed that you were restricted to a 9 to an 11 a.m. window. Now that's better. So here is a Kata 2, quick scratch, or a quick loss, quick scratch. He's out. But now what I want to say is there's your PSAR flip and collapsing dragon, which would have been about 1, 2, 3, 4 maximum in hand. And then here's an SSC, which would have failed quick. And here's a Kata 2, which would have paid huge. Now, this little cluster right here, when you notice that it does not fail, there's a second position here. This could have been 10. The combination play here. That was looking like 10R. Here's Woj. I think this may have been yesterday's. He was playing catch up. 2.5 in Devon, 4.4 in Tesla. Here's the OR3. Hits it, takes the scratch, missed the re-entry, which was about 1, 2, probably 2R. Good scratch, got paid. Good scratch, got paid. There was another Kata 2 there. This, man, that's the one we want to get in Tesla for sure. This is nice because the OR3 was here, and you might have been monkeying around inside that, but when it finally breaks the PSAR to the upside and you get this pays for everything. That's getting paid. That's getting paid. This is the pattern I want you to notice. A low, a higher low, and when it breaks above the R10, crush. And then that's a great exit. Nice work. Really has cleaned up your trading in the chop, and adding those 4 targets now gives you something to do without trying to overtrade something that's in the chop. So I just think, dude, you are crushing it. I've had some people express interest in getting a home study course from you, so maybe we'll do that. Just nice work all the way around. All right, let's hit back to the weeklies. All right, the weekend reports. All right, let's take a look. Every week we do the regression line. Whoops, stupid. Come on, regression line fractal framework, the RLFF. And what we're doing is we're looking at the 270, 90, 30, and 10 period regression lines. And the 270 is that big, thick pink line, and the 90 is the green line, the intermediate trend, and then the 30 is the black line, which is that smooth. That little uptick right there, that's the owl entry right here. And then the price is the smoothed RL10, which you can see monkeying around through here. So you can actually see that we have the fast pair, which is the 30 and the 10, and the 10 is the fast member, and the 30 is the slow member of the fast pair. And the 90 is the fast member, and the 270 is the slow member of the slow pair. And when we're looking at the regression line fractal framework, what we're a lot of times interested in is the difference between the long-term buy and hold of the 270 and the short-term trader's price. That's the trader's price. And it's in the difference between those two orientations, long-term buy and hold fair value, and the stretch that is represented by the traders moving it around. That's where we get the another view of the market. So like at moments here where you have the R10 and the 270, that maximum stretch down, when it can't go any further down and then starts to work its way up back to fair value. In the time it took price to move this far, to move up that far, the 270, because of that bearish trend, has compressed that much. So when we see this, we recognize that is a moving target because it takes time for that price to get from these extended excursions back towards the fair value. Sometimes they get past the fair value and then collapse. And then when this could not resume, you get that next leg down. Double bottom, caught a 2. It's across the 270, and now price has made this move. And now what we can see is the price is that thin black line right there, and it has moved all the way up to 398. The trader's price, that smoothed RL10, is this, which is here. Now the importance there is it's getting ready to test that top. So price has given it a little run for its money. It's getting ready to come into all of this resistance. But the good news is that we can see that there's evidence, now that we're through the election, of some upside movement. Now, what we need to see is the 90 begin to diverge from the 270, which will be slower to reverse. And when it does, that will be a turning point in a market sell-off that has lasted, the whole year. So when are we going to see that turning point? The 90 will turn first because it's shorter. And what we've already seen is that the 30, which is the health of the current trend, has already turned. And the RL10 price has given us leg 1, a pullback, which stayed north of the RL270 and is now resuming, and is now getting ready to test this level at 390. So this is a decisive move to the upside in the making. If we actually see it get through 410, 420, 430, that upward pressure is going to be enough to make the 90 roll up and eventually the 270 roll up. We could say, all right, let's see what the next 2 years of the Biden administration looks like now that we're through the chaos of the election. So, interesting times. We've seen on the MACD 4 seasons, we've come out of the winter. That was the winter. Spring has gotten us to about here. And now we've got a little bit of summer. And if it can make a new move up, then there could be some legs here. But we're going to remember that we are in bearish normal, and short-term time horizon and short-term trading outlook is going to get rewarded from a risk-reward basis here. Okay? Let me know in chat if you found that helpful. All right, let's take a look at the 30-minute. So we're looking at a 30-minute chart on the S&P. Here's our 5-day range. Here's our 10-day range. There's the 10-day low and the 10-day high. So we're pushing hard. We've gotten above the chop, and our next couple targets are 404 and 411. This was a nice 2-day follow through after this gathered all the weak hands, then the big gap yesterday, and then 2 days of strong follow through. That's going to brief well on the weekend news reports. So let's keep that in mind. The 30-day look back, and now we're looking at the full daily chart now. Again, here's your 10-day, 20-day, 30-day look back. 30-day low, new 30-day high. And again, our two targets at 410 and 411. We've got a little Kata 2 shaping up here nicely. Support, higher support. The R10 made it across the dragon. It's going to break the PSAR and make that flip Monday. So this has some real legs now that it is cleared. Now you had this double bottom. The last time it cleared that peak, up, down, up. It's cleared. This is some clear price evidence of a sustainable rally. Long side orientation for me. On the 150-day look back, see that double bottom, support. It is now breaking above this and a couple days up. We got to get through that at 404. Then here's 412, which was that base of support. And if that can work, you got some price levels all the way up to 430 for your tactical trade. That's the next significant hurdle. Actually, I should say 404 is the next significant hurdle, then 430 is the next target. Because it's not until it gets above this that the last nice move we had was here. And let's just remember, the last time it did that, that really broke a lot of spirits. I think that was explained by the elections, that this was a tactical move. Now that we're through the elections and we're halfway back up the stack, critical state, going to go or fail. If it fails, here's our target. It has to get through this support level. So if it fails, 378 is where we get a second position short. And then the upside, as you can see, there's our price targets. Interesting times. Traders' delight. All right, let's look at our sectors. All right, first things first. Let's look at our big indexes. S&P and our baseline is up 1% today. What was weaker? Well, the Russell was only up 0.82. Diamonds were up 0.16. Here's the cutoff line between winners and losers. Treasuries were the only negative at minus 0.37. Tech was stronger and a leader today, 1.84. And emerging markets continue that 2-day recovery run in the globals. Awesome. All right, let's take a look at the underperformers first. Again, the S&P baseline. Sectors: Mexico, finance, marijuana, agriculture. This is 0.8 to 0.25. Simon Property Group, that's commercial real estate. Wheaton Precious Metals, our precious metals proxy. Consumer staples, residential real estate, the VIX, Bitcoin, and Ethereum both just got slaughtered after yesterday's recovery. That's just making people's hair on fire. That's what that is. No individual companies were worse than the market today. So the targeted rally in leaders. This is the differentiation now. Looking for leadership coming off of this election. That's what's happening right now. People are searching for the next leaders and what they think is the leg up. Now that we're going to get some gridlock in Congress, and that's normally a good thing for stocks. When you get gridlock, that means that Congress can't do a whole lot. That's generally a favorable thing. So we'll see if this has some legs. Okay, to the upside, the S&P 1%. You got materials, Aussie dollar, tech, lumber, blended commodities. Biotech is up 2%. The next cluster in here, lithium, consumer discretionary, uranium, and clean energy up to 2.6. Next big cluster, you got oil, the FANGs, oil exploration in Brazil, between 3 and 3.5. Then you got Arc Genomics, 5.8. Squarespace, 6.3. Arc Innovation, 8.3. Now, individual companies. We had Robinhood, Coinbase, 12.5. Here's our metals. All three metals were just crushing it today. Made Alcoa's trade very easy to find and to exploit. 8.7. And then Cliff and U.S. Steel at 8.2. Those things trade like excellent targets. That's what they trade like. Devon Energy, 4%. And then our three chips, the semiconductor group that we track here. NVIDIA, 3.5. Texas Instruments, 2.7. Intel, all of these better than our two tech indices. So semiconductors were a double plus. Metals were a triple plus for us there. That's all good stuff. Would expect more of the same. Follow the momentum plays. They are in play. All right, let's get our attention now to the weekend reports. Excuse me. Okay, our weekend reports for tomorrow, November 12th. Bearish normal. The 2 days of recovery after the election have really postured us nicely for the short and intermediate term trade locations, and now the long term and the midterm have come out of oversold conditions. The risk Z is giving us a sign that we can still be risk on. How good was that? That little alert. It's abnormal now because the Z score is above 1, so this is vulnerable to asymptotic moves in either direction. This is a trader's delight. The ETF2 theoretical model has really improved across the board. So it shows an increase from 30% exposure to a 90%, with 9 out of the 10 big indexes being above their 4-month moving average, and that is a plus. It's been a long time since that was true. There's our 4 snapshots. Quick look at the blended monthly rebalancing portfolios. What had been the leaders, like Latin America, really got smacked. But diamonds are in the best shape right now, and they actually have had a pretty good run. The globals really began to recover this week and this month. Treasuries and continue to lag, but real estate feels like it's turned the corner. Tech still has room to go to. In the ETF 22, we add the XL series of S&P sector spiders, and we see that the winners there, energy, finance, and industrials, all have had pretty good weeks and months. Energy very cyclic though, and was underperforming this week, these last couple days. Now you can see, yeah, what had been a leader, Latin America, beginning to suffer. Tech still has a lot of room to make up, whether it's the Nasdaq or the S&P. In the ETF 32, we add some countries and narrower defined sectors. So you see things like XOP and silver getting added to the mix. There's Brazil. Just a beautiful trading vehicle, so volatile and very, very liquid. You love to see that. Tech and XLK really had a nice week, and that's the beginning of the move back up the stack, in my opinion. And it's better than the Nasdaq Tech. Between those two, I think they're both poised to make that run, and people are looking to see where they can buy things on sale. Be ready for that move. Any sustained market move has got to be anchored in tech in order to really make it move that much. All right. Jump ahead. The Nasdaq was suffering. Really, the entire U.S. growth is suffering, whereas value, that's the Dow, is better. Mexico has had a pretty good run, but I think it's this little recovery in the Qs is not going to go unnoticed. That is an opportunity to see that really charge. There's a lot of things on sale. Looking at the liquidity and volatility, these are the top 30 ETFs by average daily dollar volume. We're looking at ATR percentage to find the ones that are in the green, that these are exceptionally volatile compared to this peer group. So that's semis in China, U.S. tech, Brazil, biotech and the discretionaries, and then oil exploration and the gold miners. Those are your most favorable short-term trading targets. All right, we're going to leap ahead to the daily report for Monday now. And so we've got a little bit of warning about a possible dead cat bounce. We're always mindful of that, but I think there are reasons why the volatility and the support, and we're through the election cycle, there's some opportunities to upside. So I would be looking more for the upsides. I think Microsoft and Apple are the two easiest ones to believe in, unless you want to play, the broader tech sectors. Diamonds have been solid. Coke, 3M. Brazil is just a terrific trader in either direction right now. High price for short-term traders. In the daily tactical summary, as you can, not going to read all of these, but you can see that there was a giant relief rally these last 2 days. We only have Disney and Tesla still on the auto framer, a significant difference from their 10-day highs. Some warning signals for dead cat bounces, but again, I think I'm tentatively optimistic the upside, more so than I have been lately. The ETFs give us that same posture with lots of recoveries. The one in Mexico is the most important because it's also a 3-month and a 6-month breakout. Only Brazil and Latin America are on the auto framer. Shift to the snipers very quick. No sniper candidates at all in the S&P because of this nice recovery. The Godzilla setups are all the ones that are paying off to the upside. Remember, Godzilla, Mr. G-Force himself, that's just telling you there's a raging move ready in either direction. It's not just down. And then in the tactical symbol set, Ethereum, Bitcoin, and the VIX, but especially Ethereum, is an enraged Godzilla, and the VIX is just biding its time, waiting to explode on the first sign of weakness in the S&P. But for right now, signs point to up. In the relative performers here, the one-day movers had some extraordinary moves. These are all better than 4 Sigma. And big names: Bristol Myers Squibbs, Eli Lilly, United Healthcare. And there's an 8 Sigma move for you. And the volatile ones continue to violate. And I think that's everything we want to cover for tonight. Happy Veterans Day. Freedom isn't free. Thank a soldier by embracing your freedom and doing something with it. Take good care, and we will see the swing traders tomorrow evening, the true storytellers tomorrow morning, Sunday for the creativity participants from Europe, and then Monday morning or Monday evening for the U.S. Creativity guys. All right. Take good care, and we shall see you tomorrow.